Well, hello everyone. Welcome to After Hours Trading. This is a brand new year. This is a brand new webcast, and you've got your same old instructor, but two news and one business as usual. And so, what we're going to talk about today is what we're going to talk about in this class. So kind of what kind of trading strategies are we going to look at? What's our approach going to be? How much money are we going to start our account with? This is going to be an introductory class. If you are joining me for the first time and you've never been to one of my classes, please type a greeting into the chat so we can welcome you. And then let's get kind of right down to business. Today, we're going to look at some stock positions. We're going to pretend that we have just inherited $1 million. So, like if we're pretending, we may as well go big, right? And we're going to look at growth stocks and some dividend stocks. And there's a very specific reason that we're starting out that way. Now, is this entire class going to be about stock investing and trading stocks? No, we're going to have options in there as well. There's going to be a little bit of a lot of things, as we go forward through the year. But I'll explain in more detail as we go. If you are not following me on X, I invite you to do so. My handle is Barb Armstrong CS. I am posting content there on a daily basis that I hope you'll find interesting and informative. James Boyd is a prodigious poster in the world of X, and if you're not following him, you know what, something is going wrong. So you may want to, correct that and start following James Lickety Split. His the handle is James Boyd CS. So there you go. So somebody said, does this replace getting started with options? For me, it does, in that I have passed on the baton, and Cameron May will now be teaching getting started with options. I am going to be teaching the getting started with technical analysis, which Cameron taught in the past. And so we're kind of trading places, so to speak. Okay, so that's that. Let's get through some important information. And then we'll get out to the platform. So know that, we will be placing example trades in every single class, every single after hours trading class. It is a trading class, so trades will be placed, but know that these are for example purposes only and not to be construed as a recommendation on the part of Schwab or myself. We will be using the Paper Money software application, which is a brilliant place to learn. Yeah, so if you are not using the Thinkorswim desktop platform and want to follow along and place example trades along with me, then you may want to download that. Okay, and it looks like, smells like, feels like real money. There are some nuances and differences, and I'll point those out as we go along. I was riding shotgun with Brent Moores in the futures class today, and they said, well, why is a stop loss order not guaranteed to get you out at the price you requested? Well, because a stock could gap down, or a stock, if the sell-off is really quick, then you may not be able to get filled at the price you've requested. And even though it's triggered a market order, you could get filled at a lower price. So, but having a stop or loss order in place, what it does is it tries to help you define your risk. Okay. All right. So we're going to do a lot of things here, and this isn't just today's agenda, nor is this a complete list, but we're always going to start by looking at kind of what happened in the market today, or what is trending in the markets overall. We're going to look at both technical analysis concepts and fundamental analysis, depending on the week. We're going to look at, and this is going to be a critical part for a lot of what we're doing, looking at conditional entry and exit order techniques and ways to manage risk. I love to trade, but I'd like to say I like to very much take a calculated and manage risk, and I very much want to manage risk to the downside. And so we're going to look at ways to be able to do that, and then we're going to look at potential example trades. So as we go out to the market, and so what kinds of things are we going to look at? Well, we're going to look at stocks that that are growing, growth stocks. What might a growth stock be? Well, there's lots of them out there. Like Palantir was, I think, the number one performer in the S&P last year, up over 300%. Wouldn't it be nice if we bought ourselves one of those at the beginning of the year? The Metas of the world, that was a stock that was up a lot. So if we come here, let me just type a couple of these in. Here's Palantir. And, my year-to-date number is going to be, not a great indicator at the beginning of the year, right? Because we're now one trading day into the year. But so what I did is I came over here underneath patterns where we've got this little price axis, and I switched it to show price as percentage. Okay, so when we look at Palantir up, so this margin now is showing percentage. It was up 355%. Okay, so yeah, we might end up trading futures, Josh. Josh is asking about trading futures, but that's not going to likely be taught. We're likely not going to cover that in the first month because I've got like this whole lineup of things that we want to talk about. So, we're going to look, though, at some growth stocks. We're going to look at stocks that might provide an income for us. Why is that? And I've said, like, we're pretending that we've just inherited $1 million and it's been plunked into our account and we, don't know what to do with it. Now, the reality is, if you actually did inherit $1 million, you might say, you know what, I'd like to diversify my risk. And a really easy way to do that is to invest a part of this in an index or an ETF that tracks the S&P 500. So with one trade, I'm now got a little bit of 500 different companies. And, over the last 30 years, and I'm going to record a mini session on the power of compounding, but with the S&P 500, over the last 100 years, that index has returned 10% a year on average. Over the last 30 years, it's returned 9.67. And if you were saying, what about the last 15? Well, 12.6. So that's not a bad return. But I can't trade ETFs in this class, so we aren't going to do that. You'll want to go to, I believe Connie Hill is still teaching that class on Monday afternoons. And then you might say, and then I'm going to take a piece of it and I'm going to invest that in the NASDAQ 100. And that represents 100 companies. It's tech heavy, but tech's really been driving a lot of these indexes in the last several years. And there are no financials in the NASDAQ 100. But if I took a part of that, over the last 30 years, the NASDAQ 100 has averaged a 14.65% return, and over the last 20, about a 13. So, but what we're going to do in this class is we are going to pretend we have $1 million. Let's say we, it inherited 2 million, and that's what we're going to do with the first $1 million, and then that's off on the side. So this we're going to invest in stocks, and we're looking at, well, part of this money I just want to invest, but hey, I'd like to try and protect my giant heap, but I also would like to be able to generate some income. And so while we may look at investing in some growth stocks, we may also look at some dividend stocks that we're hoping will also grow, but will kick off a dividend that will provide income. We're looking at maybe trading some buy right covered calls with the idea of trading them in a way that it's a dating strategy where we're looking at just buying it and being in and out of that trade in somewhere 15 to maybe 30 days. And that idea is to generate income as opposed to be a long-term investment. And then we're going to look at a lot of short-term trading strategies, and we can either use stocks for that, or we can also use options. And I took a class many years ago before I became a coach. It was called the 4-Day Live, where they talked about, and it was actually after hours trading. So we talked about putting in conditional orders with very specific entries. The idea was that these were going to be not day trades, but short-term trades. So days to weeks. like typically we'd be in and out of that trade within a few days. And so those were, trading short-term option trades based on swing targets, flag targets, trend reversal patterns and breakouts and that kind of thing. Now, if I am speaking another language that you're not familiar with, just hang with me. Like, I'm not going to assume that you understand all of this stuff right out of the gate. Why are we starting with stocks today? Well, because, my friends, next week I am going to be watching the whales in Maui. I'm going to be swimming with the sea turtles. I am going to be drinking something out of a coconut. Well, maybe not literally drinking something out of a coconut, but I'm not going to be looking at the markets. And last year I thought that I'd be able to access my demo accounts, and I wasn't able to do that. And that week I was in Maui, it snowed like crazy here. So I thought I should have been sponsored by the, Utah Ski Association, but the markets did not react well to my absence. So we're going to do longer term trades this week. And, you might say, well, is that a cop out? No, it's real life. It's real life. And so if you're about to go on vacation, do you want to trade a bunch of strategies that require you to manage them daily? And if you go, well, I'm going to be on a cruise ship, it's no big deal. I'm going to have Wi-Fi access. I can take the first half hour of every day. And you might say, no, I'm going on a vacation to vacate my life. And so I'm not going to do that. So yeah, somebody's saying I love swing trading, and I kind of do too. As we grow this class and what we're doing with it, if we have a period of time, like the markets have been very bullish the last 2 years, but 3 years ago, there was a lot of bearishness and a lot of our accounts sat in cash, and we traded a lot of short-term options, conservative option strategies. And you may think conservative and options don't go together, but it all depends on, how you trade them. And a lot of our money sat in cash. So we're going to do a little bit of a lot of things. There are also some things that now trade 24 hours a day. And that group of products that trades in that fashion is going to continue to grow. So, this is basically a trading free-for-all with a lot of rules and trading plans and structure wrapped around it. Okay? So that's what we're doing. And I want to thank, we've got almost 200 people here, and it's 4:00 Eastern, kind of the end of the trading day. And I just really admire that you guys are investing in yourselves. I see a lot of the usual suspects like Will and China and Riceberg and AP 514 and Patrick and the rest of the gang here. I want to thank you all for being here. Like I mentioned earlier, we have got Mr. James Boyd riding shotgun in the chat. And every strategy that I'm going to talk about, he understands in spades. So if you've got questions, throw them out there. Yes, I did get a Crocs ornament from McDonald's. I don't know which country my son was in when he got it, but it is hanging on my tree. James and I joked around a lot about not mocking the Crocs for a long time. We didn't talk about Crocs so much last year, did we? Okay, so here's our S&P 500. Last year, it was up 24%. I posted something at the end of the year last year, which was just Tuesday. And we've now seen a 5-day pullback, but it's still above the 100-day moving average, and many would argue that the uptrend is still intact. Okay. Oh, I see some people from way long ago are still with me. They know what I'm referring to. Yeah. Okay. And the NASDAQ, kind of same thing. When we look at over on this side here, even with this 5-day pullback, the last 12 months, we're up 27%. Not too shabby. Like Chicken Little is not out running laps in the barnyard yet. She's still in the barn. She may be warming up. Drama queens like to be ready, but, not doing too badly. How about the Dow? Wow, this is more concerning because I mean, this went like down, 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 all the way to that 100-day moving average again, and it's coming back and flirting with it again. So it looks like, and it also came down. Well, it's not below here, which is a good sign, but it broke below that previous low, which has people's knickers in a twist. So that isn't quite so bullish. But, this index also, up over 12% in the last 12 months. The Russell, by the way, I did look up the Russell also, and the Russell over the last 20 or 30 years, it was kind of a distant third compared to the S&P and the NASDAQ. It's returned about 8%, I think. And, for the last 12 months, in fourth place of the four major indices, up around 10%. Now, that certainly beats a poke in the eye with a sharp stick, but I'd take the results from the NASDAQ or the S&P, over that 6 days a week and twice on Sundays. But this is our small cap index, 2000 of the biggest of the small boys is what this is. And some of these are multi-billion-dollar companies. It's not like they're tiny. But we will not be as likely to trade as many of those. And our volatility index, it not surprisingly, when we look at the last couple of months, it's gone up. But I mean, we're still sitting at under 20, but we were closer to that 15 and below range for a while there, which was kind of lovely. And we saw it really spike today. It hit, if we're hovering over this, it hit a high of 19.5 and then closed at 17.9. So, that's a pretty big swing on the day. So we've seen kind of lots of big wicks on this index. Okay, when we come and we look at the sectors, and this is important. And if you're wondering how I got these extra columns, I did a bunch of mini sessions that started last November, and there are these trade management mini sessions. And if you scroll to the bottom, let's just go and look at those. So here are the mini sessions. We will end up with a whole pile of example trading plans. But when you come down here, I show you how to customize a watch list, the monitor tab. Somebody asked in a survey the other day, like, could you just spend a few minutes on how to customize that? How to customize your chart. That one was the very first one I did. So all this stuff, you can come and do a little bit of binge learning. And that's the trade management mini session playlist. Here, I can just put a link in. And so these are just kind of quick hits so that I'm not spending a lot of time in class covering stuff, because I get asked about these things pretty frequently. So, but when we look at this, consumer discretionary, number one, over the last 3 months, communications, number two, tech, number three, the strongest sector. And, if we look at this, even today, with its fall today, up 28%. And that's consumer discretionary. Communications is actually number one over the last 12 months, up 41%. So who's in the communications sector? Well, that would be your Verizons, your T-Mobile, your Netflix is considered a communications company, believe it or not. So that's these companies. It's up. It's the number one. Number two, three guesses, and the first two don't count. Nassar, you're asking a question. Is that the same as customizing Schwab charts? This is customizing charts on the Thinkorswim platform, on the Thinkorswim desktop platform specifically. Okay. So the tech sector is in second place as sectors go. And then third place was consumer discretionary, which we've already looked at. Fourth place was financials. So if you're sitting there with a pile of money and you're saying, well, geez, where do I start? These might be sectors to start with. And you might say, well, Barb, I'm new to all of this. I don't even know what stocks make up, the communication services sector. And so this is a new account that I've just kind of refurbished, but we could come and do a scan. And it doesn't take a long time. We could just say scan in stocks that are just part of the S&P 500. Because I don't want, stocks that are traded over the counter or, and then come down to industry and show me everything that's in the communication services. Select all sectors within communications or all industry groups. And when we hit scan, it'll say, okay, we've got 22 stocks in here. Now, on a quarterly basis, the S&P 500 adds stocks to and says farewell to sometimes 3 or 4 different stocks. And so if we want to keep this current, what we could do is come up here and say that we want to, instead of just creating a watch list, which we could do, we're going to save the scan and we're going to call this sectors communication services, if we want to get really particular, and save it. And then when we come over here, if we wanted to then look at that watch list, we are going to come down to our personal watch list and it's going to say, okay, here's one. And it will run the scan and load all the stocks that are currently part of it. Okay. And then what we can do is link our chart. So there's a little paper clip. I'm going to link my chart to the watch list. I'm also going to link the Analyze tab to the watch list. I'm also going to link my Trade tab to the watch list. So all these things are now linked. Okay. And so then we could sort and say, which one's the strongest over the last 3 months, or I tend to just look at them alphabetically. And it's amazing how quickly we can kind of click through and just say like, hey, which ones have been uptrending? I look at this, I call that a Tums chart. That just gives you indigestion if you were invested in that one. But if we come down and we look at AT&T, the Pepto-Bismol has kicked in. You didn't even need to take it. It's just been kind of like walking up the hill. And if we want to look at some of the analysis on this chart, and when I looked at this a little earlier today, it was, it was up more than it ended up closing at. So this candle means that it went all the way up over the course of the day to 23.17, and then it closed right back very close to where it opened on the day. And some might say, and I know there's a lot of familiar names in here, well, this is below the 30-day moving average. So we might want to just put an alert in, or we might say, you know what, we're doing this as a longer term investment. So let's kind of look at some of the fundamentals on this company. It's in communication services, which has been the strongest sector. If we come to the Trade tab, and there's a little arrow beside the stock purchase, and it says it currently pays a dividend yield of 4.86%. Now, here's one of the differences between paper money and a live account. In a live account, you actually get paid the dividend. In paper money, you don't. The other thing is, just because it pays a dividend now doesn't mean it can't perhaps cut that dividend. And we saw that happen with 3M last year. It had a really robust dividend and it ended up cutting that dividend substantially. So it pays a dividend of 4.86, which might be interesting from an income perspective. It also has a price earnings ratio of 18.6. And why do we care about that? Well, you might not care about that, but some might say, you know, if there's a quote unquote flight to value, some traders or investors might consider stocks that have a price earnings ratio of less than 20 to be considered a value stock. And what does that PE ratio means? It means for every $18.60 that you invest in AT&T, it generates $1 of income. As opposed to, we'll stick with the letter T, Tesla, where you have to invest $104 for that, you know, it to generate $1 of income. Now, Tesla would be considered more of a growth stock. Today, it would be considered a growth stock having a bad day because, you know, it fell like 6% today. Yeah. So we're not looking at Tesla today. We're looking at AT&T. But it's after hours. Like, could it fall again tomorrow? It could. Now, you might say, I'm just willing to buy AT&T, and if it falls, I'm okay with that. And others might say, you know what? Yeah, have you seen Peloton? And, you know, this is where some people think like it's safer if I buy stock. Well, okay, so Peloton, when we look at the last year, it's had a bit of a comeback. It came up to a high of $10. But if we go back, shall I take you on a trip down memory lane? You know, back in 21, when the pandemic was roaring and everybody was at home, Peloton's stock just skyrocketed and went up to $171 a share. Last year, it hit a high of 10 in the last 12 months. So you need to have an exit strategy in place. And the best time to place an exit strategy is when it is not falling, because that's when these pesky emotions like hope and fear start clouding your judgment. So we're going to look at this and say, well, if we were to draw a support level, where might this be? Well, we might say, we had a recent low here around 2240. Let's say if it goes 3% below that, then we're going to say, you know what? I was wrong. I thought this was going to continue uptrending. I'd like the dividend, but I don't want to get a 4% dividend and then end up, or a 5% dividend and then end up with the stock going down 20%. Yeah. So we're going to take, 22. So I'm going to come here. We're going to switch our gadget. We're going to make this a calculator. And we're going to take this 2241. And we're going to multiply that times 0.97. So that's 2173 would be our exit on this one. I'm going to write that down. That's going to be our stop on T-Mobile. Now, when are we going to buy? Well, we might say, hey, you know what? I want it to be moving on up. So I'm going to look at today and say today's high was 23.17. If it goes above that, and this is only a $23 stock, so you might say if it goes above that by like 10 cents or 20 cents, I'm in. So we're going to say, okay, our entry is going to be if it goes above today's high of 23, we're going to add 20 cents. We're going to make it 23.37. This is AT&T, not T-Mobile. T-Mobile is ticker symbol TMUS. Yep. Yeah, so if we look at this and say, hey, if it goes above this, it'll be above the 30-day moving average. Now, what if for the next 2 days it goes up a little bit, but doesn't go above that? Well, we can either wait till it goes above that, or we can adjust our entry. So when we put in a conditional order, it doesn't mean set it and forget it. I'm not leaving on my vacation till Tuesday, so I can check it on Friday and Monday. And I don't mind if I have to check a position, to see if I got in. I just don't want to be managing a lot of short-term trades. And so this is why, we're setting this up this way. So if we said, okay, how do I put that in? And how much do I even buy? I have $1 million sitting there doing currently ding qua qua. Well, if our account size is $1 million and we're saying we don't want any one account to be more than, any one position to be more than 5%, that would be up to a $50,000 position. And we don't want to lose more than 1/3 of 1%. And so that would be 3,300 in this example. Now, you might just say, like, okay, maybe 1/3 of 1% is 3,300. I don't want to risk more than 2,500 on any one trade. Well, it's your trading guidelines. You can make it whatever you want. And just because we're buying stock, it doesn't mean we have to buy $50,000 worth. We could say, you know what, I'm going to buy 1,000 shares. That'd be around 23,000. That's half of our max position size. And if you have a smaller account, you might say, well, I'm going to just buy 100 shares. That's 2,200. We could do this type of trade in our trading a smaller account class. So we're going to come to the trade tab. So how would we put this in? We're going to come to the trade tab. We are going to right click, which means we want to buy. We want to buy custom with a stop. And we are going to buy how many shares? We want to buy, let's say we want to buy 1,000 shares. I'm going to click this little, it looks like a firecracker to me, and turn it into a paper clip. Then when I hit enter, you'll see that the stop has the same quantity as our entry. Now, there's different ways we can put this in. But the way that we're going to put in this example, we're going to say we only want to buy if it goes above, so we're going to make this good till canceled. So we're going to hit our little disappearing, reappearing sprocket. We only want to buy if it goes above 23.37. Now, tomorrow, could we adjust this if we want? We could. Could we adjust it Monday? Yeah, any day until it fills. So we only want to get into this if it goes above 23.37. So we're expecting that that's about what we'd pay. Now, could it end up gapping above that? And could we end up having to pay more? Yes. We're going to make our stop good till canceled. And our stop is going to be placed at 21.73. So if we assume, and we're just going to assume, here's our stop at 21.73. If we get in at the price we're asking at 23.37, how much are we risking? $1.63 a share times 1,000 shares. So we're risking $1,600. Is that less than 3,300? Yes. So is that acceptable? Yes. When we look at this and it says, what is the size of the position, saying 22,830, although that's actually based on the current price, we're saying we only want to buy it if it goes above 23.37. So this number would actually be 23,000. And is that less than 50? It is. So have we met our position sizing rules? We have. And so we're going to put this in our dividend stock group. Okay. And hit send. And again, you know, this note says, hey, no guarantee you're going to get out at the price you're requesting on the stop, given that you get in. And then on Monday, in our trading a smaller account class, we'll look at this and adjust it accordingly. But I'm teaching every day, as is James next year. And if you want to see the schedule, if you come to Schwab Coaching, we're now in January, you'll see, you know, the 5 new classes that we're teaching, you know, including this after hours. And for the classes that I am teaching, and, you know, it's 1 a day, kind of like an apple, 1 a day keeps the doctor away. Trading a smaller account is Mondays and Fridays. I'm going to treat the trading price pattern as a companion class to that. The after hours will be a standalone. And so we'll getting started with technical analysis, although we will actively trade those accounts and we will track our results. Like we'll follow up on the trades that we place in those accounts. But for this after hours trading, the reason I said I'll follow up on this in the trading a smaller account class is because that's the last class I teach before I go. So, and just to let you know if we've decided to adjust that entry or whatever. Okay, because next Thursday, I will be gone. And then, you know, someone will be filling in for me. And then the following Thursday, I'll be back and you know, we'll be rocking along. Okay, so that's our first one. If we wanted to look at another stock in this category, well, actually, let's pick another category. Let's go to Amazon. So feel free to type into the chat. If you have not bought something through Amazon in the last 6 months, feel free to type something into the chat. Like, and I prefer to frequent local merchants when I can. But boy, oh boy, this sure is handy. Up 47% in the last year. Okay. Kevin, I'll write that down. Can we go over time in force selections in a future class? Yep, we sure can. So what we're seeing, you know, is a stock that's been uptrending in a sector that's been one of the leading sectors in the S&P 500. And today we have an inside day at what is arguably a support level. One, the 30-day moving average, which has been acting as a support level since September of last year. And also it's come down close to this 218-ish range a couple of times. So it came down here to 218.43, you know, 219, 218.94, and it came down and kind of kissed the 30-day moving average again today. And this is a you know, 10 times more expensive stock, you know, at $220 a share. But if we look at, and, you know, we didn't go through with AT&T, and I encourage you to do that. Like if we look at AT&T on the Analyze tab, if we scroll down here, we can see that the earnings per share went up by 155%, 2023 over 2022. Free cash flow was up. All of these numbers are positive, although sales were kind of flat. But you can come down here and just have a look at some of these the fundamental markers. And then you can do the same thing with Amazon. And if you're not familiar with the company, excuse me, all of a sudden I've got this tickle in my throat. We can see that their earnings per share went up by over 100%. They lost money in 2022. Their profit was $2.90 a share in 2023. But again, all of these numbers are positive, and we can see, book value and everything been just kind of marching up the hill. So, and this is in the consumer discretionary sector. So if we wanted to add this to our portfolio, it's another uptrending stock. Now, does this pay a dividend? It does not. Is it a value stock? It is not. It would be considered a growth stock. But if we wanted to add that to our portfolio, could we just say, you know what, I'm just willing to add it. It's had a nice run up, it's come back and looks like it's bouncing at a support level. So we could just come here and sometimes there can be a big variation between the bid and the ask. This is such a heavily traded stock, 33 million shares today, that the bid ask spread, even in the after hours, is tight. And where might we put a stop? Well, we might say, I'm going to go 3% below that 218. So 218, call it 218.20 times 0.97, 211. So if we put our stop there and we end up buying around 220, how much are we risking if we buy 100 shares? We're risking about $900. Are we okay with that? Yeah. Okay. So we're going to come to the trade tab. We are going to right click. We are going to buy custom with a stop. We're going to put our stop at 211.65. We're going to buy 100 shares, which is about the same size position as we did with AT&T, about half of what our max position size is, and about a third of what our max risk is per trade. Now this, if it doesn't fill by the end of day tomorrow, it will, this will expire. And so you may want to check this tomorrow and just make sure. And then we'll talk about stop management in an upcoming class. So we're going to put this in our growth bucket. So now we have one stock in our growth bucket. We have one stock in our dividend bucket. And if you wanted to, check out, some other examples, we could look at, anybody been to a Cinemark in the last 6 months? Not a Cinnabon, a Cinemark. Here's another company up over 120%. Could we look at a stock like that that's been pulling back? Or, and this is consumer discretionary, or a Shake Shack, which was actually up today almost 3%, 2.67. Could we look at a Kroger? And this is a consumer staple stock, but it's had a good last year, up 33%. Could we look at Marvel in the tech space? So there's lots of things we could look at. I wish we could meet almost every day on this, but we can't. We get to meet once a week. A Cloudflare, that's another interesting tech stock. But if you haven't had enough of me this year, I am teaching Trading a Smaller Account tomorrow at high noon. We teach that class on Mondays and Fridays, so I hope you'll consider joining us for that. That's a pretty jam-packed class. I want to thank you all for joining me on this inaugural run. I'd appreciate it if you would hit the like button if you found this content valuable. It moves this up in the algorithm so that YouTube will show this as an option for more people to click on. It also lets James and I know you found it helpful. So hit the like button, subscribe to the channel if you haven't done that already. Follow us in the Land of X, James Boyd CS and Barb Armstrong CS. And I'm looking forward to another year of learning and growing together. Have a really awesome rest of your day, everyone. That's it for our webcast schedule today. We'll see you tomorrow morning at the market open. Bye for now, everyone.